So you are watching the power table. And in the past couple of months or so, we have seen South African focus shares back in vogue. And this is a few weeks before an election that many are suggesting may see the African National Congress forced to share power for the first time since democracy came in 1994. So we're asking the question, what are they buying and why? And what would that model portfolio look like? Let me introduce my bank of panelists. Mandisa Zavala, Head of Asset Allocation, Alexforbes. Mandisa, thank you for coming.
Thank you for having me.
We are also joined online by Zwelakhe Mnguni, Chief Investment Officer, Benguela Global Fund Managers, David Crosoer, our Chief Investment Officer at PPS Investments, and last but not least, Jason Swartz, Portfolio Manager at our Old Mutual Investment Group. Gentlemen, a very good afternoon and thank you for your valuable time. Mandisa, I'm going to start with you. So, for us who report on the markets every single day, the story that we aligned with was everything South Africa is bad. If you go overseas, it is looking good. And then a few weeks before elections, what do we see? Everything SA Inc. is being bought. And I'm asking, what kind of strategy is informing this?
It's an interesting strategy. I think South African stocks, equities and bonds have actually been very cheap and attractive. I think from a valuation perspective, the reality is that SA has been selling off for most of last year, and some of the stocks are looking way worse than they should actually when you factor in some of the fundamentals. We are on an environment or the cusp rather of a year that looks slightly better than last year from a growth perspective on the back of improved load shedding levels and just some of the logistical constraints that we had, which are starting to look much better. And I think the reality again is that the fundamentals do tend to trump over everything, and that's what investors are looking at and trying to buy.
And we're going to dig deep into them. I wanted at the outset to ask what your model portfolio would be looking like in this environment. Feel free as well to tell it as it is if you feel okay.
It was an interesting start, but we are also very much overweight offshore equities as well.
Still?
Yes. Yes, we're finding value offshore. I think again on the back of, just revised global growth numbers that are coming out from the IMF World Bank. It seems like growth is going to look much better going forward. And I think we've sort of taken a hold of that and have bought into some of the themes that are playing out. We are very much loving local bonds because the yields are extremely attractive in an environment of high inflation. And yes, there are select sectors in local equities that we are also interested in. I think global fixed income, you want to play it on an active level because, we don't know where rates are going at the current moment. So yeah, our overweights are those.
So broadly, it's equities. That's the story.
Yes.
Versus bonds.
Yes.
Okay. And more international versus local.
Correct.
Okay, let's move on. Let me bring in our other participants in the conversation. Zwelakhe, if I can come to you, please give me what that portfolio is looking like, and as close as possible, of course, to what you actually have put money in. Zwelakhe, can you hear me?
I got free.
Okay. Just checking you can hear me clearly.
I can hear you now.
Okay.
Sorry, I think my line dropped a bit there.
Okay. It's pretty much the same question that I put to Mandisa that I'm putting to you in terms of your portfolio construction in this environment, in particular ahead of these crucial elections that many are suggesting could well change the political and economic landscape in South Africa.
Yeah, I'll probably maybe mirror some of her positions, and firstly saying that the global stocks, there may be quite a bit of opportunity, broader opportunity set there, but I'd still say that the SA stocks are also quite attractive. We've been oversold for quite some time. And I think we are seeing that things might get better. Hopefully the elections are not disruptive, and we should see some of the foreigners see value here in South African market. But certainly, if I had to stack them up, I'd say global equities, SA equities, and then I'd say SA bonds in that order.
Yeah. So you are saying you're still overweight overseas equities and a little bit of local equities. Is that correct?
Correct.
Correct. Okay. Okay. And you don't like bonds?
No, we do like bonds. I mean,
Oh, we just lost him. We just lost him. We just lost him. All right. Okay. Let's bring in our other participants today. David, I'm coming to you. I'm hoping you can hear me. Technology seems to be giving me a kick here. David, can you hear me?
Yes, I can hear you loud and clear.
Okay, fantastic. All right. As I was saying to Zwelakhe, it's pretty much the same question that I put to him that I'm putting to you as well. Just your general asset allocation strategy in this environment ahead of these important elections.
Yes, we've got a slightly different position, I think, from my colleagues on the panel. We're neutral South African equities and neutral global equities. Clearly, South African equities look very attractive on valuation grounds, as do South African bonds. We're actually neutral both SA equities and SA bonds. So we haven't yet been moving to an overweight in that asset class. I think fundamentally South Africa's big challenge has been its growth rate and whether it will ever get its growth rate above its cost of funding. And I think we want to see a bit more clarity, although there have been some improvements that things are moving more emphatically in a certain direction. But we haven't underweighted SA equities or SA bonds. So we've maintained a neutral position because they could rally, and in fact, as you pointed out, they have over the past couple of weeks. But we are overweight SA cash relative to other SA assets. We still think, as a risk mitigator, that looks relatively attractive, and will allow us to deploy into more growth assets should we have a little bit more conviction around the direction that we're going. So, we think the environment's relatively uncertain, so we're not taking too big asset allocation calls in our portfolios at the moment, relatively close to strategic with, as I said, some cash overweight.
Okay. So you are seeking shelter abroad while neutral at home. Interesting. I just want us to fix some of the issues that we're having with our technology. So I'm coming back to you, Mandisa, just in terms of understanding your SA Inc. Strategy. You did say you are overweight the overseas equity side, but on the South African side, what is the stance? And are there any particular sectors that you are looking at, that you look at and you think, geez, this is huge value?
So an interesting one, which I think if you were to ask me this question last year, I would not have pointed out, which is SA Financials, because we were expecting that rates would start to come down much quicker. And so, typically SA Financials, in particular SA banks, tend to not do well under an environment like that. Of course, we've had inflation surprises and some hawkish comments from our own SARB, as well as overseas Federal Reserves. And it does seem as though rates are likely to remain on the higher end of the spectrum, and that does bode well for some of those banks in terms of their profit margin. I think they are, as I mentioned, we would be more excited on the local bond front. And, sometimes we do get asked the question, but what if there is a sell-off after the elections, given that it's so unprecedented? And it could be the case, but we would see that as an opportunity to buy some more. And I think, as an investor, you want to purchase as much as you can while you still can. But this being an environment of high rates, high inflation, you want to make sure that you get your bang for buck.
And I'm thinking, given the rally that we've seen over the past couple of days, you must have been squirming a little bit because that rand dollar price.
Yeah. No, and I think it's important to sort of also have a barbell approach where you do have access to equities, but you also have access to fixed income. And I think, some of my colleagues have mentioned that strategy is essentially also in their portfolios. So on the one end, maybe you may be crying because maybe it actually does badly for some of your assets, but on the other end, it's actually positive for bonds. When our rand actually does, is stronger, that actually comes back quite strongly for those asset classes. So I think we've adopted that strategy so we don't squeal as much.
Absolutely. Let's bring in Jason. Jason, sorry we are coming to you slightly late because of our technical challenges, but I'm hoping that they are behind us now. Just give us your position.
Sure. So maybe a little different to the other guys on the panel. We have been overweight SA bonds, although we've been trimming it. So obviously there's been some nice monetary policy support and very strong real yields on offer, but we just thought going to the election, we want to take some of the risk off the table. Still marginally overweight. We've been adding to SA equity. So again, slight overweight here. Obviously a tough operating environment. but a lot of valuation support and quite a nice diverse earnings base. In terms of global asset classes, well, let me just finish on SA cash. We've been underweight there for a while. Obviously, rates are high, but we think MPC is going to cut later next year, and we think there's more opportunity in other growth assets. Globally, we've been underweight global equity. We have been hedging some of the upside participation, so buying calls, so buying optionality to participate in the rally. But fundamentally, we just think that some of the impact from high restrictive real rates are still going to be seen in terms of some of the growth numbers, and there's just no valuation support there. So underweight global equity, and then pretty neutral, I would say, global bonds. We have been buying a lot over the last 2 years, but global bonds for us, even despite some kind of disinflation momentum, we still think that the demand-supply dynamics aren't favorable. So we don't want to kind of increase our duration on global bonds, and then just some overweight global cash just because we like it for diversification purposes.
Sure. So I just wanted to understand what's been driving your strategy on being overweight SA bonds and equities. And I'm asking the question obviously because we all know the challenges that this economy has been facing. But I'm wondering, did you anticipate that perhaps things will get better after the election?
I do think that for most of this year and some of last year, the market has started to price in a worst case scenario around election. So the extent to that, we've seen some derating in local asset classes. We've seen some of that wash out recently because the polls have suggested that we might actually have a better election outcome. Our view around SA asset classes are premised on a time frame that's more cyclical, because we think that SA equity valuations are really attractive. Earnings base is quite low. And same for nominal bonds. We think there'll be a lot of momentum towards having lower yields, but structurally, we think SA assets could be a valuation trap. So the secular story is not positive for us yet. There's still a lot of work to be done to lift potential growth for us to be overweight those asset classes on a long-term basis. So we'd like to participate in some sort of cyclical and relief rally into this year, but then start to allocate more towards offshore, where we see better long-term growth aspects until we, I think, as David mentioned, see some more proof and conviction that we have better long-term growth in South Africa.
Yeah, and what kind of an outcome would be supportive of the view that you guys have taken about the outcome of the elections?
Well, in terms of elections, I think we'd want to see an outcome perhaps that the ANC, has somewhere between 45 and 50%. I think that's probably our base case. That allows a lot of policy continuity, even though reform will be slow. I think it's rather the devil you know. So I think in that case, the market was probably expecting more of a populist shift and a lower ANC weighting. If we see continuation around, what's happening in terms of reform, what's happening in terms of anti-corruption, what's happening in terms of Eskom, Transnet, some of those kind of green shoots, then I think we will be a little bit more positive around, keeping capital in South Africa. It's also a little bit more, I think what's really important to us is the independence of the central bank, property rights, fiscal discipline, and those things are still kind of up in the air. So we'd like to see an election outcome that supports progress on those fronts before we kind of make our views around long-term allocation to South Africa.
Yeah. So on our screens, we're just writing a headline that says the market is pricing an 80% probability of a bad outcome. And I'm coming to you, Zwelakhe, and I'm assuming, given your overweight position on global equities versus SA assets in general, what kind of an outcome you are anticipating? Are you in that camp that's saying we're likely to see a bad outcome for markets out of the elections?
No, not at all. I think it's more of an opportunity set and a broader opportunity set that you get in offshore markets. I agree with Jason. I think there was too much of a populist outcome that was priced into the asset classes in South Africa. So I do think that the election outcome would probably be better than what was expected if you go 3 months ago. And it would be good for the equities. It would be good for the bonds, South African bonds. I mean, our bonds are amongst the highest yielding bonds in real terms around the world, and it's an opportunity, but it's not an opportunity that foreigners would rush into unless our political picture actually emerges quite solid. So not necessarily about SA not being attractive. I think SA is quite attractive, but it's more that there are far more attractive opportunities elsewhere in the world. As you know, that the US has been the one that was carrying the rest of the world in terms of market performance, and there are other regions that haven't done so well, and there are opportunities there, like Asia Pacific, for example.
What kind of an outcome would persuade you to change tack in terms of your overall investment strategy?
Look, if we get a populist coalition, let's say, so if you get ANC, I mean, the outcome is that the ANC is gonna get a significant vote, but if it then partners with a extremely populist side, it might create serious concerns for us that we may see not only policy or reforms being slowed down, we might actually see shifts in terms of policy, and that may not be a good environment for most asset classes in that situation. So if, let's say, we see a partnership between ANC, MK, or ANC, EFF, I think I'd be concerned that the ANC won't be able to have much bargaining power there. That'd be my biggest concern.
Okay, great. Thank you. David, I'm coming to you, and I want to know what would shift you from neutral to overweight SA in terms of a political outcome out of the upcoming elections.
Yeah, so sometimes just the passage of the election removes quite a lot of uncertainty, regardless of the outcome. So, just the fact that we go through an election, we peacefully go through an election, those are all kind of big wins in a way. It's also interesting, sometimes even if you could perfectly forecast the results of the election, you wouldn't necessarily know how the market's going to respond to it. So I think, post-election, depending on the kind of volatility that goes into asset classes and how they're priced, might cause us to change our view on certain things. But as I said at the very beginning, I mean, the fundamental question is whether South Africa's nominal growth rate can be higher than our cost of funding. And until that's the case, it's difficult to make a long-term secular view on wanting to be overweight South African bonds. We currently think the South African Reserve Bank will remain independent regardless of the election outcome. I mean, we think that institution, it's highly unlikely that that independence would be threatened. So, I've said previously that we are overweight SA cash because we do back that. If there are challenges to the independence of the South African Reserve Bank, I mean, that would obviously change our view. That would be quite a negative outcome for us. But broadly speaking, I think we need to see a bit more positive conviction in our growth rate, and that the reforms are coming together for us to want to get really buoyant on it. We are a multi-manager, so we also invest with managers who implement their own asset allocation views. And it has been interesting that some of our managers have become a bit more positive on South Africa, given how much bad news is currently priced in. So, I think one just needs to keep an open mind in terms of how one assesses this and positions the portfolio, not try to be too dogmatic on any particular outcome.
But how much of bad news, or perhaps how much of the good news that we have seen in the past few weeks would those managers have taken into account? And I'm particularly referring to here a number of surveys that we have seen suggesting business activity is keeping up. Then, of course, the most visible, perhaps the most impactful, has been the continuous supply of power from Eskom and the advancements that have been made by the authorities that this is not election gimmicking, this is about real recovery in generation capacity at Eskom. So the question I am asking, if I may be clearer, is to what extent are the current prices that we are seeing reflecting the probability that growth may surprise come past the elections? David, I'm still with you.
Are you directing that question to me?
Yes.
Yeah, so I think a lot of people will be playing kind of a tactical rally in SA and maybe not yet convinced that the recovery is going to be long lasting. But that's difficult to call, given how much bad news was priced into SA and how low the bar is for positive surprises. So I would say, there clearly is scope for us to be positively surprised. We're not underweight SA assets precisely because we think there could be positive surprises. But I think most people would fear the rally might be a bit like the 2017 Ramaphosa relief rally that peters out unless we're actually seen to have significant reforms taking place. So the jury's still out on that. We wouldn't want to make a call on that just yet. We'd want to observe and monitor that and then have a bit more conviction later on.
Yeah. Mandisa, would you be in that camp that says that even if there was a rally, it might not be the rally that markets have been waiting for, given the huge undervaluation of South African assets?
Not necessarily.
How are you placed?
Okay.
How are you playing it?
So I think it is definitely a reality that we may see, especially if the outcome is as per what the market is expecting. We may see an initial rally, and then of course we go back to status quo. And status quo essentially just means that we then fall into the same wave as we did before, which means we are impacted by global fundamentals and global dynamics.
But what about all these things that I've been talking about? You've been listening to me.
I hear what you're saying. I'm just saying, yes, we could get that initial push from the relief rally that's coming through.
Yeah.
But the truth of, and I think someone spoke about it now, to say policy is important. Policy continuity is what the markets are going to be looking at. I think there is a risk premium that has been priced into South Africa for quite some time, and that is why we're cheap.
Yeah.
We're cheap because we've been priced as a risky asset. And I think given that risk premium, essentially now we need to ask ourselves whether the risk premium goes down massively in that we have a government that is now all of a sudden, just doing things that we've never seen on a positive front, or that risk premium goes up slightly, which means that actually there is a stall in terms of some of the things that we've already seen. I think we would invest, when we look at the stock market, we would look at, it's important to also look at the different businesses that are operating in South Africa.
Yes.
I think it is sometimes you do kind of get caught into the overall view of the JSE, but those are companies.
View.
Exactly, those are companies that are operating in the current environment, in the current market, and so like one of my colleagues, we are also a multi-manager, and I think it is interesting that while you can holistically be negative on South Africa, you still find companies that are doing exceptionally well in an environment that has been quite tough to operate in, and so that's the lens in which we would look at it through.
Okay.
I want to say one more thing, because there are also alternatives to invest in, like the private sector as well. Although we're discussing the public sector, I think portfolios that can access the private sector are likely going to be getting returns in, from different areas as well. And that could be an avenue of alpha.
Yeah, I was actually going to ask as well, to what extent you placed on the commodities outlook picture, because what we have also seen in the past few days, yes, commodities have been under pressure, but commodities have been rallying, be it your PGMs, be it your gold price. Never mind, we're no longer the big gold house that we used to be.
I mean, 100%. And I think when you do talk about the recent rally that we've seen in South Africa, most of that has been because SA resources have been doing well on the back of the commodity rally.
So we've seen the banks coming in as well.
Yes, 100%. And I think staying on the commodities, we're approaching an environment where there's this green transition, right? Everyone is talking about greener energy. And there are key commodities that are in support of that. We're seeing copper being, demand for copper going up, palladium. Those are the kind of commodities that are likely going to continue to do well over the long term. And so, you do get tempted to kind of paint one brush stroke over everything. But I would say in an environment like this, you sort of have to kind of drill into the individual fundamentals. And I think there are some positive shoots and some that are, could potentially be traps, essentially.
Yeah. Gentlemen, we are running out of time. Amazing how time flies when you have got a lot of voices that are saying a lot of important things. Jason, if I can begin with you in terms of just summarizing your thoughts about where you are likely to find the alpha that she is looking for within the South African Inc. environment in particular.
Yeah, I think there are plenty of opportunities in SA Inc. I think broadly as a group, they haven't caught up in the same magnitude as other pockets of the JSE. If you look at what's driven a lot of the outperformance, it's been Anglo-American for a corporate action and Naspers. So, you know, a lot of these companies and sectors, whether it's clothing retail, whether it's banks, I think should benefit from interest rate cuts later down the year, should benefit from two-pot. You know, and I think the earnings growth could be fairly resilient. So we would definitely be looking in those areas to see, you know, where there's strong earnings growth stories, where there's quality stories, and invest capital there specifically to get that kind of uplift for SA equities.
Yeah, I'm getting everybody's view in terms of cuts from a South African perspective. From an Old Mutual perspective, how many cuts are you guys expecting, if any at all?
I think there definitely is scope for cuts, potentially up to 100 basis points. You know, I think we don't have to rely on the Fed cutting first, but our inflation dynamics are a little bit more supportive. So I think from a monetary policy perspective, there is scope to cut. We just need to see a little bit more momentum in terms of the inflation trajectory. And yeah, so I think in terms of real rates, I think we could come down to maybe 2.5%, which would imply about 100 basis points of cuts this year.
Yeah, okay. I'm coming to you, Zwelakhe. Your view in terms of what will drive alpha this year?
Yeah, certainly. I think a lot of the SA Inc. Has, I mean, as Jason said, some of the retailers, some of the banks, I think the real estate sector as well, although they've had quite a big rise in the office market on the property side. I think there are other areas that are starting to look like they've stabilized, and there could be an opportunity there as rates come down in future. So I would probably say around I'd still maintain a slightly overweight position in the commodities. I'd keep the precious metals, gold and PGMs in place. I'd also have the diversifiers there. But the point I'm making is you also have geopolitical tensions that are happening that may drive gold even further than where we are. And we're likely to see that supportive of the gold stocks. On the PGM side, there is a bit of pressure, but I think probably overdone. And yeah, I mean, broadly positive across the board, but I'd be more cautious on the rand hedges.
Okay, someone should be telling Anglo-American they don't want Anglo-American platinum. Anyway, another discussion, another day. David?
Yeah, so we're also looking outside the public markets in South Africa also for opportunities. So we've traditionally only invested in our public markets, but the JSE's obviously got a lot more constraints. So, you know, we're looking at private markets and where we can drive fund opportunities, and I think that's quite exciting. And then on the market, I mean, I suppose our theme is with all the geopolitical uncertainty, there's likely to be a lot of volatility. So I think we would be looking for managers who we think can exploit that volatility and reposition their portfolios quite actively. So I suspect there's going to be a lot of noise, not just with our election this year, and a lot of dislocation in markets and a lot of debate about where the interest rate cycle is going to go, etc. And I think coming out of that, managers that are able to exploit that are probably going to be our main source of alpha for the rest of the year.
And how many quantum of cuts that you guys are expecting? Sorry, I forgot to ask Zwelakhe, but let me get yours and then I'll get back to Zwelakhe.
Yeah, so we had this idea most of last year that rates would stay higher for much longer than the market was expecting. We don't have that view anymore. And so we're pretty much aligned with consensus. I don't think we think the SARB's going to cut before the Fed, but I mean, we could be proven wrong there. But like the colleague from Old Mutual, we could easily see potentially, you know, meaningful cuts from SA if the Fed moves, which we still expect them to do.
Meaningful, he is saying. He's not giving me a figure. All right. Zwelakhe?
Yeah, I'd probably say maybe 50 to 75 cuts on the SA side. Presumably, that would come with a 25 to 50 basis points cut from the US. So that would be our range in that regard.
Okay, I'm hearing cuts. Mandisa?
Also aligned with Zwelakhe, about 50 to 75, I think, given some of the hawkish comments that have come out from our SARB and Fed. I think inflation is a bit sticky, so we would lean maybe seeing on the upper end about 75 basis points.
Yeah, it's an interesting debate, that one, because I keep having to repeat this one because we did ask a very specific question out of the governor. Who do you move before the Fed? And he was very, very clear. As you know, he can be very, very clear. So he said, we watch the Fed. We don't follow the Fed. So one to keep up in mind. And very quickly, what's likely to drive our returns this year, in your view? And I'm talking SA Inc. in particular.
SA Inc. in particular, I think we definitely need to be over the inflation, the election. I think there's a lot of uncertainty around that. I think if we start to see a lot more certainty around Fed policy, that actually promotes a risk on global environment, which actually starts to bring South Africa into the fore of global investors. And I think when they do start to look at SA assets, that then starts to prompt them to actually start to buy. And I think the global environment has to sort of align. Obviously, China's another one, and I know we didn't talk about that, but it's also another one. If it does come through quite strongly, I think that would also promote some of momentum on our stock market over and above everything that my colleagues have said.
Interesting. And it's interesting for me that all of you guys, no one is saying the fact that we've got continuous power could well continue, and that could be the kicker that has been missing. Everybody is doubting Hosienzo Ramaphosa. Let's see if they turn out to be right. Gentlemen, thank you very much for your time. Totally appreciated. Just to remind you, we're talking there to Zwelakhe Mnguni, CIO, Benguela Global Fund Managers. Thank you, sir, for your time. We also had David Crosoer, Chief Investment Officer at PPS Investments. Sir, again, for your time. Thank you. And Jason Swartz, Portfolio Manager, Old Mutual Investment Group. Thank you, sir. And Mandisa, for your time in studio. Thank you.
Thank you.
And that's it for Power Lunch Southern Africa. I had a quick check on the JSE All Share Index, and we haven't gone anywhere. It's 1/3% now, 0.34%, 270 points in it. So this market is being bought. How long? As you heard, let's wait until May 29. Thank you for watching.